The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the opening bell, and we got jobs data this morning, 4.0%, the unemployment rate. How about that? Wages going up 0.5%, a little bit hot on wages. Labor market remaining tight. Revisions in the prior couple months, 100,000 added. Market sees no reason for the Fed to cut, and why would you? Unemployment at 4% and wages going up 0.5% on a monthly basis. That means inflation is a present threat, and the jobs market is remarkably tight. They have two mandates, full employment and price stability. Wages are still going up 0.5%, and unemployment's at 4%. Why would you be cutting in that environment? And the market looking at that a little bit this morning. We have yields rising about 5 basis points. We have markets basically flat, digesting this news. And let's jump over to yields. As we got a little bit of lower price and higher yield, you see the initial move to 110. We came into that number at 8:30 at about 109.16. We're at 109.5. You had the 10-year at about 4.44 this morning, and we're at about 4.5. The 10-year 4.5. You put this on a daily, and you can see still higher highs and higher lows. We'll see where we go from here. The market digesting it. S&P's oscillating a bit, but nonetheless, we're basically flat right now. There's your 8:30 volatility, right? About a 30-point range, and we're right where we were at 7 a.m. Eastern Time this morning. NASDAQ 100, we're positive by 4 points. That's even with Amazon trading a little bit lower this morning. Dow up 26 points right now, and you have the Russell negative by 3. Bitcoin, how about it? Back near 100,000, up $2,500. Crude sitting up 40 pennies, right at $71. Gold contract. We were nearing 2,900 yet again this morning. We've pulled back a bit as we've had higher yields. You jump over to the dollar. Pretty muted response. We got yields going up a bit. The dollar, right where we were. Same deal at about 7:30 a.m. Eastern Time. You see the volatility on that number, but nonetheless sitting just down under 108. And the dollar just been chopping around this 108 area since we hit that area November 22nd, right? You accelerate to 108, we pull back, we drive to 110, we're back to 108. Seems to be an area on a longer term basis, right? Consolidating a bit towards that 108 price level, which correlates to the highs we had back in October of 2023. All right, let's check out Amazon. Come on, keep up with me here. There we go. So Amazon, they got a supply problem. Can't keep up with demand, much like some of the other cloud providers. Nonetheless, you see the volatility down to 221. We're sitting at 232. Amazon going to open down almost 3% on the open at 230. You closed at 238. We'll get into their numbers soon, but let's take a look at the jobs numbers to kick things off. And yeah, the headline from Bloomberg is leaves room for the Fed to hold rates steady. Now, their bias is towards cuts. But if you look at the data, why would your bias be towards cuts unless you have recency bias that somehow the Fed has to be much lower than where they are? If you look at the data, the market adds 143,000, less than forecast, okay? The last 2 months were very strong. Okay, 100,000 added in the last 2 months is what you have in there. Let's scroll down to some of the numbers I was looking at. Come on, there's a lot of takes on this, of course. Here we go. Wages jumped by 0.5% on a month, much higher than the 0.3%. I mean, you carry that to 2 decimal points, you might be double, right? Wages could be going up double what the market was expecting. Not quite, but pretty close. Yeah, that's the most obvious vector, which labor market strength flows into inflation. Keep your eye on this stuff, man. From what the Fed said in terms of Chairman Powell changing the statement last Wednesday, okay, they were ahead of this data, period. They knew this data was coming. They're getting indications, okay? They're not stealing the data, but they are keeping their eye on this economy, and you're seeing inflationary forces present at the same time that the labor market is remarkably tight with unemployment at 4.0. Yeah. And you had a bunch of revisions, but stay current, because that's what the Fed's going to do. They're going to stay current. Okay, they're not going to say what were the revisions everywhere. Yeah, African unemployment rate up to 6.2% in January, up from 5.3% a year ago. So annual revisions, job growth averaged 166,000 a month last year from 186. So 20,000 off of every month is what the number is. But like I say, try to stay current, okay? Your unemployment rate's 4.0. You had revisions of 100,000. And so what do we have? We have the Fed with a conundrum. And it's not really a conundrum. Why would they be in a rush, right? We have immigration policies that could potentially impact things. And yes, you're seeing some follow through here, man. Look at this move. As we get the 10-year now at 4.5%. Just like that, we're 109.04. You came into that number at 119. It'd be interesting if we get a swing back to the lows of 107.08. We're less than about 2 points away from that area. I think we hit 107.06. Yeah, that was low. 107.06 back on January 13th. It seemed like then all the talk was we were going back to 5%. And with these numbers, maybe that's where the 10-year is going. Going to be interesting. The Treasury Secretary talking about they're going to focus on the 10-year. Well, the battle's going to be on, right? And taking a look at the jobs number again, just on a visual representation. This one was from CNBC. 143,000 is the number, okay? But how about December? Yeah, 307,000 in December. Quite a number, man. And you had 261 in November. The average the last 3 months, what is that? 307, 261, and 143. 400, 700, 233. Right? 234,000 jobs added over the last 3 months. November, December, January, unemployment at 4%, and wages rising 0.5% on a month-over-month basis. 0.5% on a month-over-month basis. You do that by 12 months, you got a 6% pay raise. With a 4% unemployment rate. And so you focus on that, and yeah, I would say the Fed, we're going to see the battle is on with yields right now. Because why would they be in any rush? And they're going to be looking at tariffs, which are going to be inflationary as well. Okay, you may agree with them. They're inflationary. They're a tax on American companies mostly that are bringing in goods overseas, and they're going to either pass that tax off to consumers for inflation, or they're going to allow that to eat up their own profits. Both of those might be a little tough for for this market to stomach, but we'll find out. You jump over the VIX, man. The VIX is not worried. Come on. It was a little bit slow. How about a 14 handle? 1498. You get over the unknown of the jobs number. It comes in line. The market takes out some volatility. Market's in the green. We got 15 minutes till the opening bell. We'll take a look at some Amazon. We'll take a look at some other equities. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have markets in positive territory. VIX down with a 14 handle right now at 1494. We jump back to yields. My computer's struggling a bit this morning. Maybe I just got too much going on, or there's too much going on in the market. Nonetheless, you got the 10-year 109.05. We're sitting at about 4.5% on the yield on the 10-year. And yeah, when you talk about numbers last night, we got Amazon. Going to be interesting to see how they open, and they are not slowing down on CapEx. How about $100 billion this year? How are any companies going to compete with these companies? When you talk about building data centers, what they talked about here is that they are constrained by the ability to build out fast enough to get the energy that they need. That should subside, they talk about, in the second half of this fiscal year that they're coming into. Look at the numbers, right? Amazon's AWS cloud computing business is generating more than $107 billion in revenue a year right now, and they're going to be at $150 billion plus in 2026. It's 2025. Amazing. And Amazon has been outperforming its peers in dramatic fashion. They had underperformed their peers for some time as well, though. Now, we take that and you tie it to this story from the Journal, okay? And this isn't going to stop, and this is why NVIDIA was at one time the most expensive company in the world. Not quite anymore, but boy, you talk about the run. Look at this chart. A 5-minute chart that goes back 5 days. It's up 15% back to 129 after driving to a low of 111.51 on DeepSeek fears, okay? Does this chart show you that NVIDIA shareholders should be afraid of DeepSeek? It does not, folks. Look at the capital spending quarterly. This is the quarterly spending of 4 companies reaching $75 billion. Annualized, that's $300 billion in capital X spending on a yearly basis. Amazon's going to be at $100 billion by themselves. All right, and they break down each company here. This is 2024. You're at 83. They just said they're going to be at 100. Alphabet, they're at 52. I think they're pushing 75. Yeah, 75 billion is what they're going to be. Look at the rises we have here. It's not going to stop. The battle's on. Microsoft, they're going to be at 80. They were at 55 last year. Well below that the year prior. Meta, he's coming, man. He's coming. 60 to 65 billion, but double almost what they were last year. Almost, not quite. Remarkable numbers on CapEx. Amazon's not going to slow down. They all see a generational opportunity. NVIDIA, one of the big benefactors. And yeah, we'll see how, it'll be interesting to see how Amazon opens. Sitting at about 232. The market slightly positive on the jobs number this morning. You jump to where this market is pricing things right now. Still an 8% chance for a cut coming down the line in March. I think that's throwing away your money. Now, things can change by March 19th, okay? But to change to the tune that you need a cut when we just saw wages going up 0.5% on a month-over-month basis and unemployment's at 4%, what's going on there? The market pricing in now just one cut, maybe two by the end of the year. What I'm interested to see is, when does the market start pricing in a tail to the right with hikes? I think it deserves some type of ability, and it's not there at all. Everything is priced to the cut side right now, and I'm not saying they will, but there's no reason why you can't pause for 5, 6, 7 months and see where we're going. And if that's the case, and you see the wage data like we have right now, yeah, there's going to be a lot of impetus to say, why are we even thinking about cutting? And the market's just not there yet. So is that risk not factored in? Yeah, risk should be, even if it's an outlier risk. It's not factored in at all. We always see these swaps where they price in outlier risks, right? A 0.6% chance on the left side of that they're all the way down to 3%. Yeah, there's a chance. Okay. Where are the chances to the right side of that with hikes? They should be priced into this market. When you start comparing that, you say to yourself, well, if they should be priced into this market, that means that it's not priced accordingly to risk of higher for longer, even sitting at 4.5%. All right, what else we got pulled up? Oh, this one's a good one, man. So this is from Bloomberg, okay? It's out yesterday. And it speaks to the gambling problem going on. And listen, gambling should be legal, okay? You can't protect people from themselves. That's where things go wrong. And you can to a certain degree, right? That's where it's tough. Everything has a fine line. But boy, you read these stories and you're like, my goodness, and you hear them all. This gentleman, Lonte Smith, $3,000 to $5,000 every Sunday. And this story almost glorifies it, okay? How about Gino Donati, Palm Beach, Florida? I bet 10 grand every Sunday. I hope Gino's got the wealth to back up betting 10 grand every Sunday. Jackson Reddick, listen, there's such a thing as entertainment, folks. You're betting $50 a week and you're enjoying yourself on a Friday, Saturday night. That's called entertainment. That's not a gambling problem if you can afford it. But you're talking about $5,000 a week, $5,000 a weekend. Yeah, and they're everywhere. Okay? Now, you've heard me make the case before, and we got it. I mean, just gambling is everywhere, man. We're coming into the Super Bowl, right? You get Kansas City, Philadelphia, outstanding Super Bowl in New Orleans. Can't wait for that one. Tom Brady's going to be calling it on Fox. I hope he does a good job. I think he leaves a little bit to be desired, but it's his first year. We'll give him a little bit of leeway. But yeah, these gambling sites, okay? And pull up DraftKings. What I'm always surprised by is somebody that played a tremendous amount of poker, and we have Hard Rock Bet now in Florida, which is run by the Seminole Tribe. They have the Hard Rock casinos in Hollywood, in Tampa. There might even be one more further north. Is that you can bet that kind of money, and you still can't play poker online. Still can't play poker. And if anything, I would argue that it's very difficult to beat the rake in sports gambling, even if you have a slight edge. Always remember, folks, it's a negative sum game, okay? You're playing against the house with a negative sum game in sports betting. In poker, you're playing against it. It's also a negative sum game. If you play break-even poker, you're going to lose money after the rake. So you have to play better than what the rake takes out of the pot. Because if you just have a slight edge, all you're doing is you're covering the rake. You almost can't beat that in sports betting. I say almost because, yeah, there's people that beat it. In poker, though, you can play a poker tournament for $5, $10. You can play them for $10,000 too. So everybody can roll it up and parlay everything. But it is interesting that, in the land of freedom, that somehow that's not there. I always think about it because you hear these stories, you hear it glorified, man, 10 grand a weekend. My goodness, go take a vacation instead. Because if you're playing 10 grand a weekend, man, and you're getting a 10% vig, that's $1,000 right away you got to make up just over the house. We're talking other equities. We'll be right back, folks.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, relatively flat, all indices, Dow, NASDAQ, S&P, and Russell within single digits. Just as I started to say that from where they were at the close yesterday, we jump around to some of the most followed equities. Tesla down about 0.6%. Yeah, the slide continues, right? We talked about it a couple days ago. Yesterday, you rebound. We're a little bit lower yet again today for Tesla at 371. Amazon digesting their earnings last night, down about 2.9% to 231.92 for Amazon. Microsoft shares basically flat at 416. Microsoft already traded lower on their numbers. Was it last Tuesday or Wednesday? Last week. You had Google with their numbers on Tuesday. Google down about 0.6. You jump over to Apple shares right now, flat. And you jump over to NVIDIA shares, up by 0.3%. And yeah, going to be interesting to see how Amazon trades today, digesting that. You jump over to some of what went into the Amazon earnings. How about that, right? SoftBank. How about $40 billion in OpenAI? $260 billion valuation. Not bad. Didn't Microsoft get half of that company for $10 billion or something like that? Wasn't that the original deal? I think so. Remarkable. The strengthening dollar, $700 million. That's what it did to Amazon. Where's the number? There it is. On its earnings call, Amazon said it saw $700 million more of foreign exchange headwind than anticipated. So they already anticipated some, $700 million, just over 90 days. Imagine that, right? You have so much foreign exchange exposure that when translated into dollars, they were losing almost $10 million a day. International revenue, $43.4 billion. Well, that'll do it. When you're taking in $43 billion of revenue and you got to turn it into dollars and you're taking it in internationally, 23% of Amazon sales overseas. But guess what? You think that's hitting them, some of the other equities are in. How about Apple? 58% of revenue overseas. That's an issue with the strong dollar. Now, this could reverse. So keep this in mind. When, if we actually get down the line, even if it's in the next 6 or 12 months, we get some cuts, you get a little bit of dollar weakening as other economies maybe correct with some cuts, the equilibrium comes back into frame. Because, yeah, Apple, 58% of revenue overseas. Meta, 55% of revenue overseas. Alphabet, Google, 52%. Microsoft, 50%. And Tesla, 50%. Those are big numbers with such a strong dollar. It's kind of like having a wild card in your back pocket that eventually I imagine that dollar is going to pull back a bit. We have the euro almost at parity. And when that does, we'll see how it hits the earnings of these companies. But, yeah, Amazon, $700 million was the number that they saw on that number. The unfavorable impact, $2.1 billion is the number from foreign exchange rates. $700 million, more than they anticipated. It's quite a number. $2.1 billion. Hey, that's only 5%. Okay, and here's what you look at. They took in $43 billion internationally. It's going to cost them 2.1. That's 5%. And when you look at what did the dollar do? Well, the dollar went up from September at 100 to 107. Dollar's up almost 7 to 10%, right, over that period of time. So, yeah, not surprising. Such large numbers, to put it lightly. Large numbers. All right, checking in on some other. Yeah, how about Pinterest today, right? You talk about it, man. Just like that. You erase what happened 6 months ago. You're back to $40. We were just trading at $30 a couple weeks ago, and you're up by 19%. As Pinterest revenue jumped 18% year over year. Net income, $1.85 billion. Global monthly active users rose 11%. Compare that to Roblox yesterday, right? They're losing users, RBLX. Yeah, rebounded yesterday, but be careful of those Roblox shares, man. Pinterest up 18%. They give it back slightly on the open. And yeah, that story with Tesla there. I mean, the economics is just constant. Tesla sales in China fell almost 12% in January among competition. Tesla sold 63,000 units compared with 71,000 cars in the same month last year. The future better be bright because the current economics of that company are not driving the valuation. Take two. Video game maker, up by 11%. So Grand Theft Auto 4 is going to come out this fall. And they slightly miss on bookings, but they're waiting for that. Yeah, an Expedia, man. They're giving out a dividend. How about that? You're going to get 40 cents a share starting in March. And yeah, they beat $2.39 a share versus $2.04 expected, $3.18 billion versus $3.07. And look at that bar, man. That is a bullish engulfing. You take out everything we've been doing since November 4th. Boom. You do it all in a day. Now, it's going to be a gap on a daily. On a weekly, you just take it all out. Let's back this up even further. Yeah, you get the highs looming out here, but this is right back to the highs that we had in the beginning of 2022. You traded up in 2021 to 187. You're at 197. You have highs out there of 217 for Expedia shares. This NASDAQ catches a bid, man. Amazon catches a little bit of a lift, too. Only down by 2.2% right now. Microsoft, they catch a lift. You have SoftBank investing in OpenAI, values that company at $260 billion. Microsoft always with a little bit of exposure there. Apple shares flat, but they catch a lift on the open as well, up to yesterday's high of about $233.50 right now for Apple. Tesla, positive even on those China sales, up by 0.2%. NVIDIA, up by another percentage to 130. Remarkable volatility. All right, what else do we got going on in this market right now? What do we have pulled up? Yeah, we talk jobs. We talk spending. All right, let's jump around to some of the banks as we come into this one. Come on. I think our swim's a little bit slow this morning. JP Morgan, we're flat right now. Bank of America shares. See what's moving this market. Down about 1/10. We go over to retail. Walmart shares flat right now. Target down about 0.2%. We'll check out the airlines. Delta shares positive by about 0.2% right now. All right, folks, we got NASDAQ up by 80 points. S&P's up by 8. Dow, Russell slightly in the red. Stay tuned. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 12, NASDAQ 100 up by 88 right now. We keep our eye on Amazon, digesting their earnings last night. And yeah, we continue to creep a little higher, only off by 1.8% right now, or $4 in the red at 234.61. NVIDIA up a full percentage point right now. Microsoft up 0.6%. Look at that, pop to 418 right now. Apple shares in the positive by 0.1% as well. We're checking on Meta. Look at that, 723, up by 1.25%. Netflix shares. It don't stop, man. All-time highs. We hit 123 on the open? That's a real tick. How long were we there for? Yeah, we were there for long enough. A real tick of 1,023. Look at that run, man. We break out of the channel line to the upside. We come back. We test it. We're going up from there. Remarkable. All right, let's take a look at the gold contract. Gold. Look at this weekly, right? Look at the way we're powering higher, man. Now, a couple lines on this chart. We just put a blue line here to correlate when you break above that high we had back in October 24. Yeah. This is a weekly chart we're looking at. You make it up to about 2,800. We pull back briefly. And if you're ever doing a one-to-one move of this straight shot we had from February to October, okay, that was about an 800-point run from 2,000 in February to 2,800. The highs of October, you pull back, you barely do a 236. Let me resize that up. I'll show you. All right, let's take it from there. Yeah, just below the 236 somewhat. But you can see how we barely oscillated. 2,600 was that price point. You take off from there, that would bring you to about 3,400. 3,366 is the number of pegs, but 3,400. Not outlandish when you're only talking about $500. We put it back to a 15-minute. We got highs out here at 29.06, 29.02. Man. See what's going on right now. Just remarkable strength across the board. Now you got a little bit of weakness in the dollar, pulling back from 108. And that's interesting. We got higher yields, weakness in the dollar, gold trading with strength. The market trying to figure out where to go. Not always the case. As in, we got yields going up. We're sitting at about 4.5% right now. And you got the dollar backing off a bit, which is allowing gold a little bit of room to trade higher. Yeah. Jump around to some gold equities, man. Yeah, I am gold. Particularly strong. Look at this, man. Higher highs, higher lows. The trend is intact on this equity. Something like that, right? You're bumping up against the upper boundary. Let's put it back on just a daily. You can see how often. Now, we use a little linear regression. All right, where exactly it falls, maybe a little bit lower, maybe even a little bit lower there. But you can see, pretty well defined. And if we're just bumping up against the upper boundary, not a big deal. Jump to some other strong equities. Harmony, look at that, man. Up 50% from where you were trading to begin the year for Harmony. You bought Harmony to kick off the year, December 31st, you're up by 50% in that equity. Whew. New Gold, trying to break back in that channel. Yeah, what are some of the others? How about AEM? Check out this equity. Agnico Eagle. Yeah. Look at that. Breaks back within it, right? You have the channel line. You break out. You test it. You trade lower. You turn around basically December 20th, just like the other equities. And you can see why in an equity like Harmony, you're up by 50%. Even Agnico Eagle, which is just remarkably strong. There's your daily. You're back actually in the channel. You're up from 76 to 98. You put it on a weekly. These equities got movement, man, and they got it on volume. Look at the volume coming in this week, right? You've done 11.7 million shares on Agnico Eagle, the largest volume. Is that right? 11.7. Yeah. Man, you got to go back to November 11th to get a larger bar. So exploding higher with momentum. You want to see something on volume, right? The NASDAQ. NASDAQ is light on volume, man. We'll see if today changes things on the jobs number. You take a look at the NASDAQ 100. We get a nice bounce from the 21,000 area. I'm going to bring up the volume here, okay? Yeah, we're doing some volume today. Look at this. Wow. Oh, no. Forgive me. That's yesterday's volume bar is so low. It's actually the lowest volume bar day we've had since December 26th in the NASDAQ 100. Okay, just zooming in. NASDAQ 100, we do 436,000 contracts yesterday. Creeping higher, right? We do 491 on, get out of there, Tuesday. I mean, the strength comes from the bottom, okay? That is the side on the bull. You get a rebound on positive volume, but nothing like what we did when we came down on January 27th, okay, which was Deep Seek Monday. January 27th, Deep Seek Monday. But yeah, yesterday, 436,000 contracts. So see what we do today. We're at 119,000 right now. We've only been open for 13 minutes, okay, so that's a big number. But yeah, not exactly indicative of blowing through this top as we bump up against 22,000. Going to be important to see how Amazon trades today because, all these tech companies. Now what do we have? We got Microsoft out with their numbers, right? Can't live up to expectations, okay? Google out with their numbers. Can't live up to expectations. Amazon with their numbers. The expectations are too much. Amazon has tripled in share price, folks, over the last 2 years. Almost. 80 to 240. Simple math. You've made 200% over 2 years. They got a lot to live up to, okay? Because their numbers, they're pretty glorious. But so is a share price that gives them a valuation when you're talking about trillions to live up to. And I think yesterday's an indication of that. You might see a little bit of a consolidation here. A little difficult for this market to plow higher. Not exactly looking for a deep pullback, but I think you're seeing some of that resistance. With that said, even with Microsoft, Google, Amazon, a little bit of a disappointment. Can't keep up with demand. NASDAQ 100 sitting at 22,000. And the VIX is sitting with the 14 handle. And, you look at the VIX. If you're just a technical trader, just going back to last August, last July. Now, again, you have the opportunity for this to go lower. Okay, we went lower in December. That was post-election. Market was on fire. December 18th, we get a little bit of a scare. Things change, yada, yada, as we go. But as you can see, all right, wherever you fit this line, we're bumping up now against an area that potentially is an area that the VIX, when it pulls back, we get some spikes. And it seems like there might be enough unknown in this market with the type of jobs number you get this morning 4.0% unemployment rate, folks, and wages are going up 0.5%. That's what I take away from that jobs number, and I'm sure Chairman Powell's watching as well. One more segment. Don't go away. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 15 right now. Either Thinkorswim or my computer not cooperating a little bit. It's Jobs Friday. We always got a little bit of volatility, fast markets out there. But yeah, my system's struggling to keep up right now. Not sure if it's Thinkorswim or if it's my entire system, but nonetheless, it is slow. But S&Ps, look at that. We continue to climb. 61.21 right now. NASDAQ 100, as I mentioned, keep your eye on that volume, right? NASDAQ 100. Volume so far this year. Things change today. Amazon earnings. We digest Jobs Friday, and we digest higher wages and 4.0% unemployment. Amazon only down about 2% right now. All right, and we got to go to sports as we finish it up. So we have the Super Bowl on Sunday, and Josh Allen of the Bills, he wins MVP yesterday. What is so surprising here is that he wins MVP, and I don't know. I don't normally follow all of this, right? But Lamar Jackson was the first team All-Pro. So Allen's the first player in 21 seasons to win MVP without being selected first team All-Pro. The same people vote for MVP that vote for All-Pro. For all you conspiracy theorists out there that like to think about that everything's well documented on Mr. Mahomes, imagine something like this happening with Mr. Mahomes, okay? It's always who's running the show. The hater's going to hate. Congrats to Josh Allen. He had a heck of a season. Lamar Jackson as well. But it is interesting that you get voted All-Pro first team and Allen second, and somehow that reverses. But nonetheless, we come into Sunday, and the Chiefs, yeah, they're going for 3. 3 in a row, a three-peat. Pat Riley's going to profit from that if it happens. Don't forget to trademark anything if you ever get an idea like that, folks. Kansas City going for a three-peat. Patriots never did that. I'm just looking for a good game. Stay safe out there. If you're having some fun on Sunday, take an Uber. No drunk driving. Life's too beautiful. We'll see you back here Monday morning, folks. Stay tuned. Basil's coming up next. Have a great Friday and weekend, everybody.